everyone. Thank you for joining us for this special episode. This is going to be part of our educational series programming. I'm here with Ibrahim, who's the CEO of Mine, along with my co-host Ryan Gorman. Now, what's going to happen over the course of this episode is Ibrahim is going to walk through and show exactly all the different components and aspects of crypto mining from front to back. This is going to be a really, truly special show. And Ibrahim, I hand it off to you.
Awesome. Thanks, Alex and Ryan for having me. So as Alex just said, we're going to be talking about crypto mining. So I'm just going to share my screen. And what I'm going to do today is do an overview and talk to you guys about the details of it, because mining is a very important aspect of the cryptocurrency space because it really underpins the security of it. And hopefully by the end of it, you can have a pretty good idea of what blockchain mining is, what Mine does, and if you have any questions, we'll take care of them at the end. So there we go. So I'm just gonna, there we go. So Mine has been around since 2016. We cater to deploying large-scale cryptocurrency mining operations. We focus on both ASIC and GPU mining, which I'm going to talk about later, what that involves. We source cheap power. We produce firmware and software for the industry. And we do stuff like this education, because I think it's very important for people to understand what mining is and how exactly it works. So this is our website, newmine.io. You can check out what we do and any sort of details about us on the company website. LinkedIn, if you guys want to connect, more than happy to answer any questions. We don't charge for everything. We do provide information free of charge very regularly. So general market overview. If we focus on what mining is, firstly, Bitcoin and Ethereum use what we call a proof of work system. Actually, Ethereum is going to change to some proof of stake, but we'll come on to that later. So proof of work is the process whereby very powerful computers, referred to as miners, validate transactions. And for this effort, successful miners obtain new crypto as a reward. And this allows a healthy stream of new coins to flow into the market. But you've got other coins such as XRP from the company Ripple, which are pre-mined and can only be obtained by purchasing them. So you've got different coins. Some of them you can mine. Bitcoin and Ethereum are an example of that. And then you've got other coins such as XRP, which you can only buy from exchanges. Right now, with Bitcoin, 6.25 Bitcoins are essentially added to the network every 10 minutes. That's called the block reward. So there's two main groups of miners, ASIC and GPU rigs. The main supplier of ASIC machines is Bitmain, and but we do have other competitors entering the space. So Bitmain, the latest model that is produced is the S19 machines, and they can produce around 100 terahashes per second. ASIC stands for an application-specific integrated circuit, and an ASIC is essentially a microchip that's designed for a very special application. So Bitcoin ASIC, for example, can only mine Bitcoin and no other coins. GPU rigs, on the other hand, involve having these graphics processing units, which is what GPU stands for. And with a GPU rig, you can mine a range of coins, not just Bitcoins. You can mine any of the altcoins, such as Ethereum and Monero. Now, what's going to be happening soon in the next 3 months is that Ethereum is being moved to a 2.0 protocol, which means that it's going to be staked. So you won't be able to mine, Ethereum like you do now in the near future. You can only accumulate Ethereum by holding it, and by holding it and staking it, you're rewarded with more Ethereum. So it's a new verification protocol that is coming to the market. So here we've got, on the left-hand side, we've got an ASIC. This is a Bitcoin ASIC that is used to mine Bitcoins, of course. And then on the right-hand side, we've got a GPU rig that we've produced. And the GPU rig there has 6 cards, and it can mine any of the other altcoins. So if you think about it, if we really break it down, an ASIC can only do one thing, whilst a GPU rig can do a range of things, and it is a more versatile machines. Which machines the client goes with depends on their preference, but generally speaking, large-scale cryptocurrency mining operations have a lot of ASICs because they're more reliable and they're tailor-made to do this particular job. So they have greater uptime, and you don't have to they're less hands-on essentially. So this is a load of GPU rigs that we've deployed for a client in North Carolina, and you've got 7 cards in each of those machines. So as you can imagine, there's a lot of cards, and that's only just a subsection of the mining facility out there. So this is looking at the hash rate of Bitcoin earlier this year, and it just keeps going up and up. Of course, you've got these little, drops throughout its period, but generally it's on an upwards trajectory. So if we look back to July of last year, you've got the hash rate doubling during that period of time, and the Bitcoin halving has happened in May of this year, and the network hash rate has still gone up, even though the block reward has halved. This is the Ethereum network hash rate. So Ethereum's been a bit different. You can see that the hash rate increased massively during 2017 and 2018 when you had the big bull run and all these ICOs coming out and all these coins coming out. A lot of people were very excited about it. Hence, you've got this uptick in hash rate. But although Ethereum is still, producing some really good projects and it's a great token in my opinion, the hash rate has dropped because it's not as profitable as it used to be. So the factors to consider when mining, the purchase price of the machines. Mining is very much an economies of scale. So the more machines you have, the cheaper things get, the cheaper the machines get, the cheaper the power gets, and the more profitable your mine is. And this is why the mining sector has been dominated by a small number of wealthy people. It really makes it difficult for the smaller miners to get into the mining picture. So what really happened when we had the Bitcoin block happening in 2016, you had home mining not becoming profitable anymore. With this halving that we had in 2020, you've got smaller mining operations having to shut down, and it's only the very large mines that are capable of maintaining profitability. Depreciation price of the machines, so you need to expect to upgrade your machines every 3 to 4 years. The electricity cost, so generally mining operations right now are run in places with very cheap power. In North America, you've got places like Washington State, North Carolina, you've got Labrador City in Canada. These are some of the sites that have cheap power to run mining operations. Within Europe, you've got places like Iceland and Norway, and of course you've got China with loads of cheap electricity rates. Actually, right now, 2/3 of mining operations are running within China, so China really dominates the landscape in terms of large-scale crypto mining operations. Variations in mining difficulty and asset pricing affect how profitable your mine is. So the higher the mining difficulty, the harder it is for you to mine the blocks, and the more competition there is. And of course, cryptocurrency is a volatile asset. So with Bitcoin at 12,000 as it is now, you're going to have a more profitable mine than with Bitcoin at 6,000 as it was a few months ago. So if you want to get into mining, what are your options? One is you can have 1 or 2 machines at home for fun. Essentially, you're never going to make a ton of money doing that, not anymore anyway. You've got cloud mining, which is, we never recommend it. In cloud mining, companies that sell cloud mining contracts, they essentially pay them and they say you're going to have X amount of hash rate over X amount of time. And no one really profits doing this. The only people that do profit are the people selling the cloud mining contracts. The other option is to buy your own hardware and get it hosted professionally in a large data center. So we deploy, as I said, large scale mining operations. So our average client would buy around $60,000 worth of our machines and deploy them. And that's proven to be the most profitable way. But of course, that presents a problem in that there's a high barrier to entry, which means that the average person doesn't have that sort of cash to deploy in a mining operation. So unfortunately, we're seeing this centralization of mining. So over time, mining has become more and more centralized and not as decentralized as people would have hoped. And that does raise some questions for the crypto community. So in 2009, when Bitcoin first came out, and the reason I'm focusing on Bitcoin is because most of crypto mining is Bitcoin. There are, of course, people mining Ethereum and whatnot, but most of the large mining operations are mining a lot of Bitcoin. So in 2009, the block reward was 50 Bitcoins. So every 10 minutes, 50 Bitcoins were mined. This then dropped in 2012 to 25, and we have just had the drop in 2016 it dropped, and now in 2020 we've had a drop from 12.5 to 6.25. So over time, what's happening is that the amount of Bitcoins entering the system are reducing, and because you've got this reduction in inflation, logically speaking, over time that could indicate that Bitcoin's price might go up. So currently, the annual supply growth of Bitcoin that's entering the market is around 330,000, with daily issuance of 900 Bitcoins. Bitcoin inflation over time. So you've got the inflation rate of Bitcoin. As you can see, you've got these big drops, and that's when a block halving happens once every 4 years. And the monetary base, I mean, we don't even need to talk about that. If you look at what the central banks have been doing, recently, massively has been triggered by coronavirus. They've been printing more and more money, and the purchasing power of your fiat currency has been going down. So whilst your purchasing power of fiat currency has been going down, the inflation rate of Bitcoin has been going lower and lower. And of course, Bitcoin has been one of the best asset investments that anyone has made in the last 10 years. We post some information on our website, on our blog. If you want to keep up to date with sort of market trends and whatnot, it's on there. And if we plot the halvings on a graph and we look at how that has impacted the price, generally speaking, what we see is that after the halving, you see a spike in the price, not immediately, but shortly after. I'm not saying that this is going to happen again, but the market has been trending upwards since the halving. But of course, there's a lot of other factors to consider. We've had coronavirus completely changing the world in 2020, so that's going to have an impact on Bitcoin's price as well. I personally like to judge Bitcoin by yearly lows, not all-time highs. And the reason being is that highs are usually generated when there's big FOMO and then very short-lived. But if we look at the yearly lows for Bitcoin, we can see that the lowest price that was registered in 2012 was $4, and we can see it increasing up to the point where we've got $365 in 2016, $3,200 in 2018, and 2019 was 3,350. So we'll see what 2020 is going to bring, but it's looking like a strong year for Bitcoin's price already. I have no affiliation with Mark Moss, but he's a YouTuber that I like to follow, and he posted a good video, whether Bitcoin can hit 100K. This might seem crazy, okay, but that was a time when people thought that Bitcoin hitting 1K or even $100 was crazy, even 10K was crazy. But now we've got a Bitcoin price of 10 to 12K, and I'm of the opinion that this is something that could happen given all the global factors that we've got and the way that Bitcoin has been built and programmed. It does, in the long term, often result in the increasing of its price. In my opinion, Bitcoin and gold are on the same team, right? Bitcoin, gold, and silver, that is, because they're all essentially battling the constant inflation of fiat currency. Every single fiat currency has collapsed sooner or later. If we look at history since the time of the Egyptians, etc., fiat currencies are replaced sooner or later. So in terms of storing your assets long-term in cash, it's not really the most viable solution. So gold, silver, and Bitcoin essentially battle that. And Mike Maloney is a really good economist that I like to follow, and he's putting a book out, I think later this year or maybe next year, on this very topic. This guy spent his entire life talking about investments in gold and silver, and now he's added Bitcoin to the mix. Bitcoin versus gold, how mining speed has changed. So if we look at the Bitcoin's mined since 2009, as we've discussed, it constantly keeps dropping. Gold mined since 1870, it's always getting more and more by the day. So that's how Bitcoin and gold mining differs. Some people in the gold mining industry have started showing an interest in Bitcoin mining, but one of the things that's constantly brought up by ethical people and whatnot is that Bitcoin mining is bad for the environment, and I don't think that's very true, because outside of China, at least, a lot of the mining operations use renewable energy sources such as hydropower. And if we actually run the comparisons, gold mining consumes 20 to 25 times more energy than Bitcoin mining. In addition to that, you've got Bitcoin's far easier to store and transfer than gold. There's no question about how quickly you can move and how cheaply you can move Bitcoin in comparison to gold. One of the things about gold mining is actually it's a pretty unprofitable industry. So typical ROI period of large-scale BTC mining operation can be as short as 9 months. Gold mining ROI can be as long as 8 to 10 years. So there's a big difference in the ROI period. These are mobile mining containers, and mobile mining containers can be deployed anywhere, essentially. and you can store your machines in there. So essentially, when you want to put your machines somewhere, you can either put them into a big data center, or you can put them into these mining containers. One of these containers can take several hundred mining machines. The main advantage of these is being how mobile they are and how cheap they are to deploy as well. They can be as cheap as maybe around 50K per one, depending on the modifications and the specs that you want on there. One thing I've covered, and I'll recap because it's a very important point, the halving in 2020 will make mining more centralized. So over time, as it gets more expensive and more competitive to mine Bitcoin, you get the centralization of mining with essentially the wealthiest miners out there. So that's a really important consideration for the crypto community, because it thrives itself on being decentralized. But actually, from the mining sector at least, that's far from the truth, unfortunately. This is a large-scale mining operation that Bitmain has deployed pretty recently in North America, and you can see how big these data centers go. So essentially, in that data center, you just got thousands and thousands of machines mining around the clock and generating as many Bitcoins as they possibly can. Now, what Bitmain does sometimes is produces new models, it mines with them for some time, and then it sells them on. This is the GPU rig. This is if you want to mine Ethereum or any of the other altcoins. When you're producing these machines in mass, and we've done that, we've deployed hundreds of these machines in data centers. The versatility is great, but unfortunately, they're not as reliable as the ASIC. So that poses an issue when you're looking at economies of scale. But this sort of mining, where someone's mining at home with their machines, it just doesn't exist anymore. It's no longer profitable. Unfortunately, when you're listening to these price predictions, people putting out price predictions saying Bitcoin is going to be worth X amount in the future. I mean, no one can predict the future. You just be really careful who you listen to in terms of investment advice. Do your own research, do your own due diligence. For every 99 people, for every one person that gets a prediction right, there's 99 that get it wrong. So it's very much a matter of being super careful who you listen to, especially in the crypto community. If you want to stay up to date with mining news, Cointelegraph is a good option. They have a mining subsection that purely focuses on the mining sector. If you want to connect with myself, find me on LinkedIn. Happy to answer any questions, as I mentioned before. And yeah, that's it from my end. I'll fire up to you, Alex, if you want to ask any questions or yourself. Right?
Thank you very much for taking us through that presentation. When I first saw it, I couldn't believe how informative it was and how much I learned from looking at you go through that. Judging from what you were speaking to in that presentation, is there a sundowning effect to the mining business as a whole that we're currently entering due to supply constraints with Bitcoin? If so, is there a pivot that Bitcoin miners can do in the future to stay relevant?
So when you mean sundowning, can you clarify what you mean by that?
Sure. So as we look at the different halving marks and the supply that's coming out, I mean, eventually the supplies are going to dwindle with each halving, with the reward factor. One of the things that's hard to miss in your presentation is the actual size of a Bitmain facility. So, as we go down, 5-10 years, are companies like Bitmain that are spending so much from a capital intensive perspective on mining, but yet the rewards are getting cut in half. Is that business going to change?
Yeah, so mining companies, they have to become more innovative in order to remain profitable. So you've got stuff like liquid cooled systems currently the mining machines are being cooled using air, and the future of high spec computing hardware is going to be liquid immersion, people believe. So that's another thing. You've got stuff like more sophisticated software that you can install on the machines. So I think that if mining companies want to remain profitable, they need to become more innovative. The other aspect is that every block reward to every 10 minutes is also the fees that people add on to their transaction. So that's another aspect of revenue for these miners. I think that as over time, if Bitcoin keeps appreciating in price, that shouldn't be too much of an issue for miners, but unfortunately the bar of entry is being raised higher and higher by the month. Really, it's a very fast moving industry. So companies like Bitmain are able to dominate a large aspect of the mining sector, but you've got MicroBT is another example of a Bitcoin mining machine manufacturer that's recently becoming more and more popular, particularly with clients in North America. So this competition is definitely going to be great for the consumers, and it's not going to be as great for Bitmain, but for the rest of the market, it's going to be great.
Very cool. And usually we do this at the beginning of our episodes, but I wanted to dive right in the beginning with the presentation. Give us some background to yourself on how you got into crypto, the mining area specifically, and then what were you doing before all this? How did that transition happen?
Yeah, I think everyone has a story, right, when it comes to crypto. I was in the medical field prior to getting into it, which is completely different to building computers. In 2015, I started out brokering small OTC deals for crypto, and then in 2016, I saw that there was a big gap in the market for reliable manufacturers of computing hardware for the crypto industry. So a lot of back then in 2016, a lot of the companies that were present in the mining sector were Chinese companies. So for European and North American clients, that presented a difficulty, a language barrier, a distance barrier, and whatnot. So I realized there was a huge gap in the market, and I was like, let's do it. In February 2017, we closed our first sale, and I think within 6 months, the company had hit $1 million in sales. So I was like, I'm onto something here. So yeah, I mean, the rest is history, and it's been a wild ride. I think that this crypto mining is a very addictive industry. You find people getting into it and just being trapped by it, or investing in it and just continuing to invest and buy more machines over time. So in my opinion, it's definitely it's obviously biased, but it's definitely the funner side of the crypto mining industry.
So you mentioned what the startup costs will be just to get involved in like a mining industry like this. What's the average cost, I guess? What's the average spend someone puts out to put together a rig that I guess would have more than one process or something like that? What does it average take, I guess?
So it depends on how big you're gonna be producing a data center. What a lot of clients do is, instead of building their own data center, they choose to host it with a pre-built data center already, so that cuts the cost for them. And a lot of these hosting centers often have a minimum number of machines that they're willing to take in to host for you. I can't speak for other companies, but our clients typically buy around $50,000 to $60,000 worth of mining machines that they host, and that varies between ASICs for the Bitcoin mining and GPU rigs for mining Ethereum or other altcoins. So it definitely varies a lot, but this number is continuing to increase. Back in 2015, you could mine from your computer, not Bitcoin at least, but Ethereum, for example, and it'd be pretty profitable. But as it's become more competitive, the rate of electricity that you need has to be lower and cheaper in order to remain profitable.
Where are these data centers typically located?
So most are 2/3 are in China, and then you've got in the Scandinavian countries in Europe, you've got quite a lot of mines there. You've got places like Kazakhstan, which are quite popular, and places like South America. Some clients prefer to host in Kazakhstan and Russia, but that obviously comes with the geopolitical aspect. You've got far more regulations. If someone steals your machines or does something wrong in North America or Europe, you can go after them far more easily. So it's a trade-off, right? You can get cheaper power in places like Kazakhstan, for example, but if you get screwed over in Kazakhstan, then good luck getting your machines back.
Fair. One more question about that. I guess, there have been a handful of stories about power plants and other entities in the US loaning out their spare computing power for crypto mining. Is this something you're seeing increasing instances of, or is this kind of like, they're like one-offs or unique cases?
Yeah, so you've got mining companies exploring essentially using the same machines for any high-spec computing, so stuff like video rendering or genetic data processing, and that generates another revenue stream for these companies. it can be difficult though, because the way that these GPU rigs are built, for example, they're built a certain way to essentially mine crypto really effectively. So without going into the details, you'd sometimes need to change the build of the machines in order to be able to use them for other purposes. So that presents another issue. But you know, that part of the market hasn't really matured yet, and people are looking into it. The person that cracks it is gonna make a lot of money for sure.
But for now, you're better off going with specialized machines because they have economies of scale, they're more efficient, and what have you. Yeah.
Yeah, essentially, that's why. So mining of use of GPU rigs, because of their unreliability relative to ASICs, they've not taken off as much, and that's just unfortunately the case. You know, if you build something specifically to do one job, it's going to be far more reliable than something that's pretty good at doing many things right.
Very cool. I mean, what are you seeing as far as in profitability? What are some of the coins out there that have the highest rate of profitability success?
So as with anything in the crypto industry, it's all over the place in terms of profitability. But there's a website called whattomine.com, and you can essentially input the specifications of your mining machines, and it will tell you what coin is the most profitable to mine at any one time. For GPU rigs right now, it's Ethereum's quite high up there. You've got Raven coin as well. It's another crypto that's quite high and profitable to mine. Of course, with Ethereum moving to proof of stake, that's going to change. Bitcoin mining most of the time is the most profitable for the last year at least. So, you know, for our clients at least, we recommend mostly going with Bitcoin mining, and sometimes with a bit of diversification into other coins.
Very cool. Listen, you know, known you for a couple of years now. You're the CEO of a successful mining company. You're a partner in a very successful crypto fund. You know, a lot going on that's exciting in your world. And I really I want to thank you very much for taking the time out to sit down with us and go over this whole process of what you do for in your business. For everybody watching, all of Ibrahim's information is going to be down below, all the different ways to contact him. If you have questions, if you're interested in mining, I definitely suggest reaching out to him for that. You know, guys, thank you very much. This has been a really, really informative episode.